Thank you all so very much for getting up a Tuesday afternoon right after a holiday. I know in this business we don't really take holidays, but observation aside. We're fortunate enough to be here today with three phenomenal minds in our field. Shawn Mingus representing the mortgage industry, and John Tricklington and Madeline Van Ert, also with SPAAR, representing the government relations side of it. I'm going to turn it over to them shortly, but just a couple things, just housekeeping on NAGLREP. For those of you who are members, thank you. We appreciate you. There's a lot of new faces in the crowd. I've done heavy recruiting lately, so you know who you are. Thank you guys. Obviously, our sponsorship today, U.S. Bank, brought us this amazing luncheon, Panera. Hopefully, everyone found something that appeals to their taste. Just a couple things that we have coming up on the agenda as far as NAGLREP is concerned. In April, we have the Policy Summit out in Washington, D.C. I don't know if you've gone to HUD's website lately, but if you go to the Fair and Equal Protection page that the Obama administration had up, it is now a 401 unavailable. I think anyhow the 45th administration crashed this site. So in doing that, they also repealed a lot of fair and equal protections for the LGBT population under Dr. Ben Carson. This policy summit is aimed at getting face-to-face with the Congressional LGBT Caucus as well as policymakers. The folks that are going to have an opportunity to meet with their state officials, be it Senate and Congress, to hopefully try and convene a message on why lobbying for those rights and equal protection is so important. So again, those dates, April 10th through the 11th out in DC. It's pretty cheap. I think it's $160 to attend the session. It's a one-day session. It starts at 8 a.m. and then obviously travel and expenses are on you individually. Our second big headliner, we're going back to Palm Springs. This will be the third year in a row, I believe the sixth conference. This is a national conference, so we're just shy of 2,200 members right now. I think if you recall at the end of last year, so just a couple months ago, we were boasting almost 2,100. So as of this month, we're just shy of 2,200 nationwide. It's a great opportunity for folks in the industry to get together, compare notes, talk about best practices, see what's working in different parts of the state. I know some of you are licensed in various states that others are not. Some lenders are licensed in all 50, some are licensed in 10. It's a great way to really network your resources. So if you have a client that's in Minnesota and wants to buy a property down in Florida, you know where to send them, and you know that that person's going to have a good experience. Aside from that, it's in Palm Springs in October, and they make really good drinks. But it really is a great opportunity. A ton of industry specialists are going to be down there this year. I don't know that they've announced the full lineup, but we always have someone from the HRC, Human Rights Campaign Executive Board, down there speaking. I think President of the NGLCC is going to be there this year speaking. Some other folks. Obviously, we're pretty heavy on congressional delegates that show up as well. So once again, just kind of the run of show for the day. I'm going to have Shawn Mingus actually open us up. Shawn's got another obligation and was good enough to clear his schedule to be here, so we definitely appreciate that. So with that, Shawn, I'll give you the floor. You got a quick one? Thank you. It is. Just click next.
Oh, all right. So as of Saturday, I've been with U.S. Bank for 10 years. We have 5 core values, and one of them in particular is we draw strength from diversity. So U.S. Bank not only leads here with our words, but our actions, and we feel that makes us a stronger, more agile organization due to that core value. So I want to thank NAGLREP for inviting me here today and an opportunity to be a sponsor. I applaud you guys for what you're doing, fighting ignorance, intolerance, and discrimination. I'll share with you, I had lunch with a friend of mine I haven't seen in 18 years. I remember him back in 17 years, back in 2002, as a realtor, driving a fast BMW and selling a lot of homes. I think he was selling 50 homes a year at the time. And we lost touch. He got out of the business. He's now an ordained pastor. So as we're having coffee, he handed me his card to invite me to his parish or his church, and I asked him, are you a fire and brimstone kind of a pastor? And he immediately brought up gay marriage as something that he was opposed to, and went on to say that he believes that being gay is a choice. Well, we agreed to disagree at that moment and kindly ended our conversation, but I share with you what you're doing is relevant, as you all know better than I ever could. So thank you again for the opportunity to come here today. I was asked to touch on the state of the mortgage industry, 26 years in the mortgage business. So I'll share with you a presentation that I have given to roughly 1,000 loan officers. I have the distinct honor of presenting to all of U.S. Bank home mortgages new hires across the country. They come in for training for a week, and I get them Monday morning at 9 a.m. I'm the first face they see, and many of them are coming from all over the country, California, Texas, Florida, and imagine a few weeks ago when we had feet of snow coming down 30 below. The look in their eyes, but the topic of my presentation is kind of a doom and gloom, tough times ahead. But by the time we were done in that hour, they were truly inspired, because we have a choice when we face tough times. And I'll share with you kind of the premise of this. The industry is facing tough times. It's been written that the mortgage industry potentially could face its toughest year in my 26 years. And that includes the rollout of Dodd-Frank, which is the largest financial reform since the creation of the Federal Reserve in 1929. I've seen a lot in my career. So you might ask yourself then, what are the challenges that we face, both mortgage and real estate, in 2019? I would ask you, what challenges do we face? It's on your mind. What are we lacking? Inventory. What are we potentially facing with inflation and job growth? Higher interest rates. It's not a good combination. There's a lot going on. As lenders, we're also facing something called margin compression. Can they describe to me or explain what that means? We're making less money per mortgage. It's the gouging out there. It's the lenders that are literally so desperate that they're lowering their rate to compete. So that is causing many mortgage companies to go, it happens in economic cycles. There's mergers and acquisitions and things going on. But there's a lot going on in the loan officer's head and realtor's heads. How many realtors do we have in the room here? How many lenders do we have? So a few. It's potentially a tough market. There's some other things that are at play here. The online lenders and online value proposition is getting better at their value proposition. That's eating into our market share. It's probably eating into some of your market share as well. Technology is here to stay, and we're only seeing the beginning of it. So that plays in our heads too. Are we going to be around? Are loan officers going to be relevant 10 years from now? I believe they are. If they deliver value and they have the relationship, I don't think a computer can be empathetic towards a human being. I just don't think it can, maybe in our lifetime. But that empathy is a big portion of what we do, right? We're helping people in a very significant, very meaningful way. So these play in the loan officer's heads. And then I asked the question, and I've asked it, and it stops everybody from laughing about all the issues, to what if your competition is better than you? The room gets quiet. How does that feel? Your competitor is outselling you. They're smarter than you. They're a step ahead of you. That's one of our other core values, is we stay a step ahead. What if your competition prepared better for 2019 than you did? And their eyes get this big. Oh, it's not possible. I'm the best. We all think we're the best. And what we're telling our people, if you were good in 2018, you need to be great in 2019 to thrive and survive. So yeah, there's tough times ahead, but Ernest reminded me a few months ago, he's sitting in the back of the room here, that when we were talking about the doom and gloom in the mortgage industry, and he threw this quote out. It's not his quote, but I'll give him credit. He said, tough times never last, but tough people do. And to me, that was an inspiring moment, because we are facing tough times. Lack of inventory, sales down. Overall mortgage volume is expected to be down, so everybody in the room is facing a potential pay decrease. So there's these challenges, but tough people last through tough times, and tough times don't last forever. And the fact is, I have a chart to prove it, and it's really hard to see, but this is a combination of a year, total mortgage volume, purchase and refi interest rate. Really 5 data points that are constantly moving. Can anybody tell me what was significant about 1992 in the mortgage business? I shared with you earlier. It's the year I got in the business. That's what's significant. So I got into the business in 1992, fresh out of college. I looked like I was 15. My wife and I were dating at the time and lived in an apartment, didn't even own a home, and I was out calling on realtors. 26 years later, I'm still here today. I made my business developing partnerships, even though I looked like I was 15, with folks like you. But what I didn't realize is the first 3 years of my career were the toughest times I was going to face. it was a downward spiral in terms of, you know, the purchase production was, it was kind of flat, but the refinance business fell off the map. For the year I got the business refinances, your loan officer probably never called you because they were so busy doing refi business. If you were in the business at that time, I know you were. You got it in 91. So I faced 3 years of tough years, and I didn't know any better. It was actually a gift. That gift, like anything in life, when we're challenged, makes us stronger. Under that stress, I rose to the occasion. Who in here thinks they're tough? Raise your hand if you think you're tough. Who in here is commissioned? Self-employed, 1099? Been doing it more than a couple of years? I'm here to tell you, if you lived through that cycle, you're tough. The mental toughness it requires to be self-employed, to be commissioned. There is no salary, there is no security blanket. We eat what we kill. We wake up every day and we go out and we build relationships and we serve people and we get compensated handsomely for it. So it is tough in this business just in general. But then when you have the cyclical highs and lows, interest rates go from 8.3% down to 3.66% in 2012. What does that do to our economy? It drives us like this. And that's just the way the economy is. It requires a mental toughness to see the highs and the lows and kind of even it all out and make sure that you save for the lows and don't spend in the highs. These are all things that you learn. I've made all those mistakes. Make as much money as you spend because you think it's never going to end. And then when it ends, it's like, what do you do? So it was a few years ago. We learned from those mistakes. So then as the market exploded in 1995 to 1998, roughly around 2000, we had a growth in purchase market. Purchase business went from 500 billion to 1.5 trillion in purchase. And refinance business doubled that. It was a $3 trillion market in 2000 $3 trillion market in 2005. But before that, we had a little bit of a crash. What happened in 2000? We had the Y2K bubble. Everybody remember that? How that affected everybody just locked themselves up in their home with water and extra gasoline and food for months. And then when that didn't happen, we had all that leftover water and gasoline and food in our basement. But it caused the market to halt, and then it just exploded, boom times, until 2005. 2006, what happened? It's the year I bought a home in 2005. Worst timing in real estate ever. Paid top of the market. I'm horrible at timing when it comes to real estate. Don't ask my advice. But then we faced some really tough times with the financial collapse, the Great Recession, and the rollout of Dodd-Frank, the largest financial reform since the creation of the Federal Reserve. It got to a point where you guys were happy that we could even close a loan. In my day, if you missed a closing, you were fired, never to be used again. But during the financial collapse, just getting a borrower to the table, even if it was a week late, I found realtors were very understanding because of the situation that we went through with the financial collapse. It was really, really tough. Who survived through that time period? You're all tough. So, at the end of the day, tough times last, or never last, but tough people do. You're all here. And then we see the growth in the purchase market now is starting to pick up. Refinances are falling off, pretty much non-existent, but the purchase market is expected to continue to grow. This is mortgage volume, which you probably double or triple that would probably be real estate volume on a national basis. But in my math, this year, $1.6 trillion of new money will come in and out of bank stores and flow through the secondary market, end up on balance sheets. Probably $3-4 trillion in real estate. I don't know what that number is, but it's a lot. So there's lots of opportunity. There's boom times ahead. And of course, this is all dependent upon an interest rate of around 5.1%. So who knows? This is the MBA's forecast. Tough times never last. Tough people do. So that's my message to loan officers. It's between your ears. And if you were good in 2018, you have to be great in 2019. Because the opportunity then is to help people in a meaningful way, to be a part of this multi-trillion-dollar market, and more importantly, help people with the American dream. And I know it's a cliche, but at the basis of homes, which is what we're talking about, what does it mean? A home stands for our shelter. It's the refuge from the storm. It's also the place where we probably create more memories than anywhere else. And at the top, it's the single largest investment, the single largest liability in most people's lives. And it's the difference between, it reduces the wealth gap, regardless of your ethnicity, your background, your direction in life. It reduces the wealth gap, gives everybody the same opportunity. Homeownership is a key to the future. You guys have part of that. So that's the exciting part. So my challenge to loan officers and realtors is ignore the economic predictions, go out and sell, build relationships, take care of your clients, and do good things in your community, and support organizations like NAGLREP, and be there, and you'll be successful. That's my presentation.